Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to be looking at the 39th Commitments of Traders Report of 2019, and as we always do, we shall start the analysis with the largest changes in commercials positions. And as you may see, we have the Minneapolis Wheat on top of our list with a 22% change in commercials positions based on a 52 weeks look back period, of course. 22% change in large speculators as well. This, of course, can be considered a bearish COT change signal, suggesting we may see a bit of a decline in the near term. If we move on to the 5 years chart, and if you remember from my past couple of weeks COT reviews that I've been talking about the wheat market, which has resulted with this huge bullish COT Extreme, and as you may see, it was a successful signal giving us this bottom, and we shouldn't be surprised to see higher prices. Now in the medium to long term, I would say that this COT Extreme signal is still in place, and we can expect this trend to continue, but this bearish COT change signal suggests that in the near term we may see a bit of a decline in prices. Lumber would be our next market for the COT review. We have a 21% change in commercials positions, not as large as in wheat. As you may see in the past 52 weeks, we have seen similar changes, even greater ones quite often actually. So it's not that big of a change. I would actually neglect this and move on. But before we move on, just to have a look at the COT Extreme, let's open a 5 years chart, and you may see that even the extreme side, or the COT Extreme analysis in this market, is not really giving us too much. So the most bearish COT Extreme in the past 5 years was back here in May of 2018. You may see we're far away from those levels, and the most bullish extremes were back in October of 2015, and again we're far away from those levels. So you know, sometimes we look at a market, open the charts, and you know, we don't see anything exciting from the COT report. Best just to move on and find better opportunities, and maybe cocoa is going to give us a better opportunity. So let's open that. We have a 21% change in commercials positions, very similar of course to cocoa. Again, we can state that the change size itself is a little larger than average, but nothing too unusual. And if we move on to the 5 years chart, then you can see here we may actually be a little bit closer possibly to the bullish side. Definitely we had this major bearish extreme in the market back in July this year. This was a successful signal showing us a top here in the market, pushing the market down. As the prices decline, you may see traders were changing their positions accordingly, receiving a relative bullish extreme back over here in August. And now we see the market again continuing its rise. So, you know, it's not that exciting or interesting. I'd rather move on to currencies or other markets. Let's have a look at large speculator COT Extreme, because as last week we've seen, we have this beautiful all-time COT Extreme in the New Zealand dollar. Wonderful signal. It was already an all-time last week, and now we see this further increase in size. Now, of course, don't forget, I always say this in my reviews, these all-time COT Extreme can be present in the market for many, many weeks or even months before the market reacts and we see a major shift in the trend. Now, what's the trend? It's quite obvious. We have a downtrend in the market, and this major bullish COT Extreme is suggesting that this should be over, or at least for a temporary period of time we could see higher prices coming, like as it was the case back in October of last year. We have that beautiful bullish extreme in the market after this decline, pushing the market higher a little bit. That's, I think, something that would be a reasonable goal for us in the New Zealand dollar. Gold is our next market. Interestingly, an all-time COT Extreme in commercials, but 167 report extreme in large speculators. Huge extremes. By the way, the last major extreme, this bullish one in September of last year, was a wonderful signal for us to enter the market long. Now we've received this bearish extreme. Of course, we shouldn't be surprised. These markets don't, go up in a straight line. If we have a bit of a decline now, that would be quite healthy for the market. So the COT report is signaling to us that we may see a bit of a decline coming in the medium term. possibly long term. We'll see about that. Metals complex, that's something for subscribers, but the dollar index, I'll open that for ending this COT review. We have a 125 report extreme in large speculators, 124 in commercials. Again, this is a bearish COT extreme signal, but if you look at this 5 years chart, we should not be surprised if traders continued their positions or building up their positions in this direction. So there's plenty of space left to reach even greater extremes, which of course would result in higher prices in the dollar index. Nevertheless, this is a bearish COT extreme, suggesting there could be a chance for this to go lower. So that was all for this review. Of course, don't forget you can have a look at other markets and do a more in-depth and detailed COT analysis, looking at other COT report types, other data types, and so on. So I appreciate your attention. Thank you very much for being with me. I hope you enjoyed this review, and I hope to see you next week, or actually this weekend, with the 40th report of 2019. Take care. Bye-bye.